I'm Andrew with Investors Hub, here with the CEO of ADVFN and finance journalist Clem Chambers. We're going to hear his commentary on the EU market during COVID and how investors will deal with investing during COVID. If you're not already there, check out our US website, investorshub.advfn.com, or our international website, advfn.com, to see all the powerful tools we can offer you to help you succeed investing in the marketplace. Without further ado, here's Clem. So COVID crashed all the world markets. When do you think that the EU market is going to recover?
Well, if you look at the EU market, it's as they would say in the UK about soccer, it's a game of two halves. You have the German market, which is very much like the Dow or the S&P or the NASDAQ in its performance. And then you've got the French market, which is really nothing like the American markets at all. It's more like the UK market. And those markets haven't gone anywhere in basically a generation. And they got kicked down the stairs by COVID, and they're still down there. They didn't make a sort of Lazarus-like recovery like the DAX and the S&P 500. So the German market recovered and is high. And the French market and the UK market is really not in great shape. Came back from the low, but about 40% of the way, not 100%. So they're the two different market types in Europe. Now, the UK looks like it's on a slow glide into the ground. I mean, looks like it could go down almost as much from where it is now as where it fell in the original crash. Could get down, it's kind of in the mid 5,000s at the moment, could get down into the 3,000s when I look at it, unless there's a miracle. The German market will just follow the US market. And I think the US market is in for a nasty correction anytime now. And I might get out of my bunker in February if it doesn't crash before then. But sometime between now and the inauguration, I'm expecting the market to take a bit of a dump. So Europe is two markets. It's in Germany, it's like America, and in France, it's like the UK. So one's in heaven and one's in hell. I think they're all going down. I don't think it's escapable, all going down in real terms, okay? In terms of real money or the value and the purchasing power of your currency, they're all going to go down. And if the currency buying power doesn't go down, they'll go down numerically. If they print like crazy, and Europe isn't printing like crazy, it's printing pretty hard, but it's not printing like they're printing in the US. If there isn't inflation, those markets are going to go down hard. If there is decent levels of inflation, they're going to go down an amount. And the only way these markets are going to go up anywhere is if we get really high inflation. Now, I'm talking really high inflation. I'm talking 10s, 20s, 30% inflation. And that's not going to happen in the near term, because that's going to take some time for governments to get desperate enough to actually bring that about. Because what you have to focus on is governments run on money made from taxation. And taxation is generated from the creation of wealth. When you stop creating wealth, because you lock your people up, you've got less money to tax. If you've got less money to tax, you've got less money to spend. Now, the only way to spend money you're not taxing is to print it. Well, that's what they do in Turkey. That's why they've got, whatever it is, 20% inflation. That's what they do in Africa. That's why they have 20, 30, 50% inflation in those countries. That's what they do in a country like Venezuela and Iran, who have very little industry left because of sanctions. And that's why they have hundreds of percent inflation. So that is the reality. Unless the economy turns around, unless the economy gets going again, and it's nothing really in sight of that when you actually drill down into it, you're going to get budget deficits, and budget deficits means monetization, and monetization means inflation. So it's not a pretty sight going forward. And not only is it not a pretty sight, there is no end in sight either. And markets see about a year or so into the future. So until the market sees a fundamental recovery, then I think the pressure is going to be down, and it's going to be a bear market. And I think we've seen the peak of the American markets, and we now see a slow but steady grind down, punctuated by lots of attempts to stimulate the economy and rescue the situation over a period of 2 or 3 years.
So do you think that the COVID market crash will cause investors to change the way they invest in the future?
Well, yeah, I think so. I mean, at the moment, when this all kicked off, I said, well, if you close down an economy for a month, you're going to get a recession. If you close it down for 2 months, you're going to get a depression. If you close it down for 3 months, you're going to get a very bad depression. If you keep going after that, you're basically going to reset the whole global economy. And it's not just going to be the economy that's going to get reset. It's going to be the geopolitical system that we live in. And I think that's on the cards now, certainly in Europe, because they're going to have a lockdown for a month or so. They're going to unlock for Christmas so that people don't, really cry. And then they're going to lock down in January again. And then how long are they going to lock down for? They're going to lock down, to Easter? I mean, this is going to generate an economic condition very similar to a post-war economic situation of the 20s and of the 50s. Now, it wasn't so bad for America because it won that war and it ended up with all the money, all the gold bars from around the world ended up in America. So it had a boom in the 50s. But the rest of the world was in dire straits. And economically, we're going to be in dire straits. And I think if you look at the markets now, it's a sort of denial of what is to come that's keeping them as high as they are. I mean, nobody's driving the bus. The market is running on the sort of momentum that it had up until COVID came along, and these lockdowns basically reset, re-engineered, rejigged the whole of the way the world works. And there's just going to be a massive amount of disruption, and there's just going to be a lot less real money around, a lot less wealth around. Now, the notional numbers might be bigger, but then prices will be twice as high. That kind of thing will occur. So people might look at their houses and say, my house hasn't fallen in value, and then look at a gallon of gas twice as expensive as it was 18 months before. So really, the big call is, how deep is this recession going to be? How long is it going to run for? And then everything else is subsidiary. And I think that the hole that has been dug is really gigantic. And the trouble is they're still digging it. And that has sort of ramifications for anybody that's going to invest. Of course, you can invest, and then you can get caught in a crash, and you find that you haven't really got much to invest anymore because it all killed over. And we saw a little bit of the effect of what people's wealth a crash can have at the beginning of this year. Well, thank you very much, Federal Reserve. Thank you very much, the government stimulus packages. They have boosted these markets back to where they were before COVID struck. But the economies aren't back to where they were before COVID struck. So there's a disconnect there. Well, you either believe that there's a new world order and what you do in industry doesn't really matter anymore. We can all be rich and wealthy without things being made, the stores being open, property being valued, et cetera, et cetera. Or the economic reality has got to catch up with affairs. Well, I think the latter. There's an airline in Britain called Ryanair, and its price is today higher than it was this time around last year, before COVID. And it released figures saying it's down 80% on sales. Yet its stock price is high. I mean, that to me is some kind of crazy madness. And there's no explaining it using any thought processes or analysis of markets or of value that came before COVID. And it's just plain wrong. And there's a number of companies like that. Why do the companies that do cruises, why do they even have a share price right now? Yeah, it's beyond belief, because there's no end in sight for their difficulties. And the same goes for a lot of companies out there. There's no end of difficulties in their future, and yet their share prices are really high. And then you look at companies which are less affected by COVID, and their share prices are a lot more affected. Well, how do you square that? Well, in the end, you just got to say that the market is horribly, horribly wrong at the moment for whatever reasons, but reality will catch up. I hope it doesn't catch up. I really don't. I mean, it's going to be really, really tough on lots and lots of people. And, I really hope I'm very wrong here about the market, but I predict that we're going to get a crash sometime between now and February. And I think we're going to be in a long-term bear. The only way out of share prices falling in a notional way, i.e., $100 of Apple becomes $50 of Apple, is that the value of money drops. So the only way these share prices are going to stay high is if we get some kind of inflationary break. And we could get that because they're printing money like crazy. So it could happen, but there's all the economists are saying, oh, no, we won't get inflation. No, we're going to get deflation, they say. So they're printing money like crazy. Economic activity is down a long, long way. And somehow the value of money is going to go up. Doesn't work in my head.
Well, I appreciate you chatting with me, and thanks for being on the show. I hope to hear you and see you again soon.
Thanks very much, Andrew.
Thanks for watching. Like, comment, and subscribe to stay up to date with the latest market commentary and information on up-and-coming companies. I'm Andrew with Investors Hub. See you again soon.